Welcome back to another video, everyone. My name is Kyle. I'm a full-time options trader and founder of Opinicus, the premier options trading community. Today we're going to be going over a few trades in SPY. I personally took these trades in ES via futures. This was on an FOMC day. Going to be looking at the post FOMC action and how you can trade it profitably. Let's jump right into the charts. Okay, taking a look at the SPY chart here. Now, even though I did technically trade ES, I always do all of my analysis on SPY. I used to trade SPY with options. I've recently, just in 2023, switched over to trading futures, trying out a new product. So far, I'm really loving it. So if you are an options trader who trades index options, you may want to look into futures. I personally think it's a great product, but this video is not about the product. It's about the FOMC trade. So let's jump right into that. Now, as mentioned, I do still focus on SPY for all of my analysis. Basically, as always, I like to start with the daily chart just to get kind of greater context as to what the setup is. What are we dealing with here? And as you can see, just looking at this right now, it's pretty much a sideways range. We've been trading the same prices since May of 2022, just kind of oscillating around this 395 area. You have the volume point of control there as well. And so we're just kind of in a big sideways range going on almost an entire year. Now, we have to get into the near-term action to kind of understand the context of the play here. What we have here is just a series of higher lows being made and potentially lower highs being set up here. Now, coming into the day, we didn't know what the reaction around this red zone was going to be, but we did have that as a key watch. Now, as mentioned in the pre-market prep notes, this is posted every day in the Traders Think Tank. If you're not in the Traders Think Tank and you're an active options or futures trader, you need to be in the Traders Think Tank. Check that out in the link below. Anyway, coming into the day, this was posted before market open, 7:31 a.m. Basically, what we said was location for the index is mid-range. I'm watching following the FOMC announcement in the Powell presser to see how the 402 zone is treated or the 393 zone. Now, we ended up testing the 402 zone first, and where I got that 402 zone from was the 30-minute chart. If we look at this, we could see it was respected here as resistance, respected here as resistance, almost respected here as resistance, but ended up breaking through. And we have multiple other areas where this zone around 402 was respected as resistance. So I'm going to consider this a key level in the near term. The other area I was watching was this blue zone down here as a potential area of support. We also have the daily 200 period moving average coming through this 393 area. So that was a notable watch. But what ended up happening, if we get back into the near-term charts, looking at the 2-minute, this was the watch going into the announcement. Now, with FOMC, you always have to be careful. A lot of traders get in trouble on FOMC. Basically, what you have to watch for, as I shared this with the team today, is that there's 4 phases of FOMC market reaction. You have phase 1. This is the initial knee-jerk algo driven move on the release. And basically the reason it's algo driven is because what happens when you have FOMC and the rate announcement come out is you have a lot of downside hedges that are unwinding. Think about institutions and other big players in the market that have downside hedges. Once they have the news, they unwind those hedges. This creates a temporary pop in the index. And so this is something you always want to watch for. I'm not interested in really trading that move. I'm just making note of the levels that it's testing, how things are trading. I'm looking for a real setup 10, 15, 20, 30 minutes after the actual announcement. Kind of coincides right with the presser. And so Powell's presser. And so phase 2 is the market reaction to the presser. That's pretty much what I'm interested in. Phase 3, we have the cooler heads reaction from 2:30 into the close, and then phase 4 is whatever overnight gap we have, and then the next day reaction as well. Now we're mostly focused on the second phase here. The presser starts 30 minutes after the rate announcement, so that's going to be right through here. And so basically, to look at the context of what we had coming into the day. I did have my levels already on the chart. We're looking at R1, first level of resistance, as 400, R2, 402. Again, these levels are always posted right here every single trading day with the pre-market prep notes. So those are the levels that I'm watching and the levels that I'm going to be trading against. S1 397, R1 400, R2 402, and remember R2 is that key zone that we saw in the 30-minute chart. S2 down into 393, and then I always keep the prior day low and the prior day high marked on the chart just as reference points. These are not key levels, they're just reference points. And so we also have VWAP there as well. That's the only indicator on this chart. So now looking at the action coming into the announcement, is basically just sideways, right? There's no real trend here, just trading sideways on very, very low volume. Once we have that announcement, you can see the pop that was mentioned. That's the knee-jerk algo-driven reaction. Not really interested in trading this. This is a tradable setup right here, this reversal versus the resistance level. But where it really starts to get interesting for me, if I switch back to the 1-minute chart, is this first move down. And what we have here is, if I put a horizontal line, let's make this one blue so that it's easier for us to see and it doesn't blend in with the other levels. There it is. It's blue on the chart. So this was earlier in the day session low. I had that on my chart. That's going to be, again, just a reference point, not a key level, just an area where we may see a reaction, a few cents off of S1. So that's notable as well. But also what's interesting about that level, the 397.4 area, is that it coincides with the prior day structure. Now this is yesterday's structure. You can see this area was respected, put in kind of a sideways range, a bit of a base here in the afternoon yesterday before ultimately resolving higher. And this area was respected. So I'm going to be paying attention to that coming into today's session, prior day structure level. And what we had at that area is a basic hammer candle. This is a potential reversal pattern. And so what I'm interested in doing is, if price can break the high of this hammer candle, I'm going to take a long. My risk is going to be down here. Now this is a bit of a wider stop. And so because of that, we do have to drop size on a trade like this. This is just kind of the nature of trading around these events. You're going to have bigger whipsaw moves. You need to drop size because the stops are more than likely going to be wider. And so this was my first play, again, done via ES. Here are the executions. So you could see, as I mentioned, once price broke that hammer high, I'm long. I scale out into that earlier structure. I expect that there's going to be a lot of volume in this area. I'm not really totally sure how price is going to react. And with FOMC, with Powell speaking during this time, from what I found trading these events, is you can never be too sure. And so it's always better to take risk off, relatively quickly. And so that level coincides with the prior day high as a reference point. That was target 1, as well as my posted R1. Ended up breaking higher. I took more off into that 401 area right through here. You can see it on ES. That's the 4060 area. And again, for that, I'm just looking at earlier session highs right through here. I already know this is resistance from earlier in the session. If I ignore that, that's very naive of me. I cannot ignore what price is showing me right here. I know this is resistance, and so I'm going to use that as an intraday target and take some of the play off. Now, the rest of the play came off as we start to see this reversal signal at R2. Again, remember that was the key area of resistance. Price momentum starts to really falter here. And so that is a signal to me to get out of the long, and then depending on how it develops, to start to look for a short. And that's exactly what we did. We have the second ES trade, second index play of the day here. Now this entry was a little bit later. I could have had a better entry into this consolidation here, because again, remember, risk is going to be the highs. Stop is up through here in case it bounces. But ended up getting the fill there. We're short. I took some off into just this little area where it previously bounced. We have an intraday reference point here, 40.55 acted as resistance earlier in the session, acted as support right there. I know there's going to be some interest there. I want to reduce my play right around in that area. So it took some off, no real bounce. We hold for more, start to take some off into the prior R1, may now act as support. It did not. So we start to look at prior day high, may see a bounce there. Also coincides with VWAP. Take more off there. This is how I scale out of every single trade that I take. I'm always taking some off at reference points as the stock moves in my favor. I've talked about this in another video. It's basically just the way I like to trade. It's the way I protect myself. It's a part of my risk management procedure. And so then finally, my target on this play was just right into where we previously bounced. I'm going to take the rest of the play off there. That's exactly what I did. Missed some downside, but that's okay. Followed my plan. That's what I'm all about. Now, once it gets down into this area, I simply look for the next setup. Now, I'm not going to be shorting new lows. You don't do that on the index. Don't be shorting fresh session lows on the index here. Just wait for a new setup to develop. Now, if you want to be short, you'd be looking for a bounce to be shorting. If you want to be long, you need some type of structure. That's exactly what developed here. We marked a low at the prior day low. Again, that's just a reference point, but we can see that buyer stepped in right there. And so once again, I'm interested in a long at that area. That's exactly what we did. Now this trade, I was a bit fatigued at this point in the day. The tape was moving extremely fast. This type of action where you're making decisions on the fly can be exhausting. You have to be making decisions very, very quickly. And so you could see I kind of overmanaged the trade here. I was long right through here. I got spooked by this wick. I took some of it off. Once I had that greater confirmation, this is basically a higher low in the making right here. A little bit of a microstructure, higher low right there. I added the trade back, took some off again. Again, there was a little bit of a wick here that spooked me, took some off again. But then once I saw the buyers really start to step in, target again is VWAP and R1. Took the play all the way off right there. Now we did miss most of this move. I did later catch just a little bit of a scalp here, but I did not recap that one, so we're not going to talk about it. That is how you trade the index post FOMC. The main thing you want to be looking for following FOMC is avoiding chasing any type of momentum, especially if you're an options trader. This is really going to burn you. You're going to be paying up for your premiums. This is just a losing formula over the long run. You want to be really looking for how price reacts at your levels. The better way to play this, from what I have found, is with intraday reversals. Now it's going to be different if you have a true trend day. But again, remember the greater context was that we were in a range. And so the trend day likelihood was a bit lower. And so these are things to keep in mind. Hope you guys found this useful. If you have any questions and you're in the Traders Think Tank, just feel free to send me a direct message there. If you're not in the Think Tank, get in. But if not, go ahead and leave a comment below if you have questions. Otherwise, I will see you guys in the next one. Thanks so much for watching.